Bitcoin is a fantastic, fantastic asset, but you can't make native yield on it, right? And with Solana, you can. And that I think is really like, the biggest difference is, for us, we're able to make native yield in, really two ways that are like pretty similar, but staking and also like our validator business, right? And from there, like a treasury company, does things like issue debt to go and buy up more, like in a Bitcoin world, issue debt, buy up more Bitcoin, right? And for us, like, and listen, like Solana treasury companies, they do that as well. But we're also able to acquire SOL at a cheaper price because we're able to make native yields on both the staking side and the validator business side, right? So like that's I think how like the companies I think differ overall. Obviously like I can get into the differences between Solana and Bitcoin, which we view Solana more as a network where we view Bitcoin more as an asset, and really like our view really is this is that, like we think Solana is going to see the most economic activity of all blockchains. Because of that, we want to be running validators because of the fact that if you're running a validator, you get a portion of the transaction fees. As we see more and more things come on chain and more activity props up, that'll be more revenue we make, more SOL we generate. And then, the cheaper we can acquire SOL. That's what I would say. Leah, I don't know if you wanted to add anything to that.
No, I think that was absolutely perfect. I completely agree. We're now seeing obviously lots of different treasury vehicles that are coming out. As Max mentioned, we see ourselves as different. We're focused on the underlying technology, but why Solana is important, at the time, especially when we launched our strategy, there was no ETFs, there was no other public vehicles that were focused on Solana, and the market was very interested in investing in Solana. And for all the reasons that made the ETF successful, they couldn't. There's still so many barriers to entry to invest in spot. Now, those are definitely decreasing, very much so across a lot of the banks in the United States and globally. And it's still a little bit of a TBD if that does become a preferred method of buying spot. As of right now, there still are restrictions for certain registered investment advisors in the United States and other allocators to actually buy spot. So we wanted to provide another opportunity where investors could invest in a much more holistic Solana company by us putting Solana on our balance sheet, but also being completely a Solana-driven technology company. So we thought that that would be one, interesting in the market, but also two, we were just really excited to do it.
So when Michael Saylor started doing this for MicroStrategy and people realize that, okay, this thing works because you get to borrow money either really cheap or at 0% interest rates and, give bondholders that option to either, convert it to stock or give out cash, whatever, right? We'll get into the mechanics later. But I just want to understand the thought process behind, okay, the Bitcoin was fine. It was kind of acceptable. The market reacted fantastic to, MicroStrategy doing this. What was it that allowed you guys to think that, okay, now, since it is done for Bitcoin, we can do this for Solana? And, when 2, 3, 4, 5 companies do it, the path kind of becomes clear as to what you need to do to issue this kind of debt and, borrow and, buy Solana, stake it or whatever. But you guys being like really one of the first ones to do that, I just want to understand like what was the thought process, and it's really the direction of the company, right? I mean, 95% of the revenue comes from the validator sets that you guys run, if I'm not wrong, right? It's ballpark 95%. So yeah, I mean, it's a pretty big decision as a company. I just want to understand how you guys, arrived at that.
Yeah, I'll jump in here. And you had a lot of different parts of that question, so I'm going to try to hit them all. I think one of them was financing, and then one is generally strategic direction and how all in we are and why is kind of what I'm hearing. So yeah, I mean, as previously mentioned, what happened was originally Soul Strategies was a company called Cypherpunk Holdings. And Cypherpunk Holdings was listed on the CSE, the Canadian Securities Exchange, in 2018 by a whole bunch of cypherpunks, and they're amazing. So at the time, they converted the balance sheet of what was a different company. It was a hostile takeover of a uranium mining company, actually. So converted the balance sheet assets to Bitcoin and made Bitcoin investments. And it was effectively the first public company in North America to provide that Bitcoin vehicle. And that was very interesting at that time. Now, fast forward, we hit 2024. There's obviously Bitcoin vehicles, Bitcoin ETFs, but there was nothing for Solana. And the market was really, really interested in buying and having access to Solana. But for us, still technologists, we really wanted to be part of that ecosystem and run validators and actually build a Solana tech company. So it was really twofold. So to your point, we were the first. We're the first in North America, to my understanding, the first Solana very specific public equity in the world. I would love to know of a different one, but at least I know we're first in North America. But it was also important, again, that we actually started a tech company. And that was under our former CIO, Mo Adam, who is the founder of BitAccess, the first Bitcoin ATM company. So really old school cypherpunk. And then we got Max to come on, and Max and Mo had a great relationship as well. So again, for us, it was a strategic advancement and development that we saw. We think that MicroStrategy is still very powerful, but the beauty of what Saylor did was Saylor, and that was 2020. I mean, he had this vision and a powerful company to boot, and he had been a public company CEO of a multi-billion-dollar company for many, many years. And he had, with his conviction, threw it into Bitcoin and then educated the public on Bitcoin and kept that rallying call. So that's where I see there's an extreme difference of where we are in 2025, but also last year in 2024, is we're past needing just to rally cry the market and have just a vehicle. Instead, we need companies. And I think that the market understands that, and they have. If you look at the different investors in our company, it's not just a couple, it's a lot of different investors. And it's across the board of retail, institution, allocated in ETFs as well. So the only thing I'll say on your point is definitely there's been a lot of strategy, treasury vehicles that have come out. But what's interesting to us that we believe is the future development, and we think that we'll see more of, and you're already seeing some transitions, is that the market is so sophisticated at this point that they are looking for companies. They do want to look at fundamental analysis. They do want to make comparative valuations with how did the mining companies do, via historicity in the past. So that's the evolution that we see. MicroStrategy was brilliant, again, because of Saylor, and he was able to structure a very interesting capital market strategy. Now, for our capital market strategy, to hit your second question, I think, it's different because we can get that native yield on Solana, right? And you can't on Bitcoin. So because of that, we can structure things very differently that we think are more attractive to investors. Obviously, us and all other of the companies that are popping up are different than MicroStrategy. We're small, micro caps, we're small caps, we're small fledglings, which means the financing needs to be different. And I think that there's a ill expectation that everybody will finance similar to Strategy, when truthfully, we're not the same company as Strategy. They're running a different operating business and have been financing their capital market strategy in a very unique way, again, for over 5 years now. So what we think we're doing is smarter and more tuned to what is natural to the yield that we're generating from our validators, which is why the last financing round, a portion of the interest payments, if you will, are kicked back from our staking yield. So that, I'll let you read more into it. It's all public documents. But for us, that was an interesting mechanism that hadn't been done before, is to take on debt financing that, again, that interest payment is a portion of the staking yield from the SOL that we buy, that we stake to our validator. And therefore, again, for us, it's incredible. More SOL, more revenues on the staking side, on the validator business side. And we think that's the future.